what is happening in China. The world's second biggest economy seems to be spluttering as the post-lockdown rebound fades. Now, exports and imports are at their lowest in 3 years, and the property market is seeing some trouble. And now the government has had to introduce a stimulus in the form of interest rate cuts, which some say is not enough. But why should we care, you ask? Well, none of this is necessarily good news for South Africa. We've got Old Mutual wealth investment strategist Izak Odendaal, who joins us this afternoon to unpack this ahead of the BRICS Summit. A very good afternoon to you, Izak. And many will be watching this and thinking, well, why should we care that China's property sector is crumbling and that the economy is slowing down to levels we haven't seen in about 3 years. When it comes to South Africa and the BRICS bloc, as the biggest trading partner, it is of concern when we see such a slowdown in the world's second biggest economy.
Yeah, that's exactly right. I mean, China is more than 2/3 of the entire BRICS grouping. So it absolutely dominates BRICS. And as you said, it's the world's #2 economy. So it's not just us in South Africa that care about a disappointing economic performance in China. The whole world should care about what's happening there. Yeah, so obviously from a South African point of view, the one thing that we export most to China is commodities, raw materials, the likes of iron ore that gets used in steel production in China. But we also, trade other things, and we benefit from Chinese tourists visiting our country. So yeah, in a nutshell, we don't want China to slow down. We want China to grow very rapidly from our point of view.
Yeah, and I mean, are there any opportunities that South Africa could seize in a situation such as this when it comes to the exports of the raw materials that you speak about? Can we benefit from the likes of tourism or other sectors here when it comes to us making a concerted effort to strengthen ties with China?
Yeah, and hopefully we will use BRICS as a means of enhancing our trade relationships with these other countries. I think the main thing to note about China is that so much of their growth over the last 2 decades has been related to property and building things. It's been very commodity intensive. And that's obviously where South Africa has benefited from as an export. But if we look ahead, we're probably seeing that the nature of China's economy will have to change. And it's not going to be this property intensive, investment intensive, commodity intensive kind of growth. It's going to have to shift more towards consumption, spending, services. And as a result, South Africa will have to diversify our exports if we are to benefit from the shift that is happening inside China, that must happen inside China. So yeah, we need to focus a lot more on getting tourists from China to South Africa to export things like food and things that consumers like. Wine and so on, and because the road ahead for heavy commodity kind of exports is looking a bit bumpier.
And then when it does come to China as an economy, is like the stimulus in the form of the interest rate cut that we saw doesn't really then fit into this economic development model that you just described in terms of diversifying its streams of economic growth. What would you make of the latest stimulus and whether it does fit into something broader to help boost the Chinese economy once more?
Yeah, what we've seen thus far is really tweaks in terms of policy. There's nothing to suggest that there's a fundamental overhauling of the economic model. It really is kind of lowering interest rates slightly. I mean, the rate cut this morning was only about 10, 20 basis points. Last week, only about 20 basis points. So we're talking about small changes in interest rates, whereas what you really need is quite a big shift in how that economy is structured. So that a lot more of the gains in the economy can flow to the household sector. Households in China share very little of the economic prosperity. So if we have higher income levels, we can have higher spending levels. So the question is, how do you get higher income levels? You need to look at things like a better safety net, a rejigged tax system, less dominance in the economy by state-owned companies, etc. So there's some pretty big fundamental reforms that will have to take place, and as yet we aren't seeing any sign of that.
Izak, as always, thank you very much for joining us this afternoon. That is Old Mutual Wealth investment strategist Izak Odendaal joining us this afternoon.